Thanks so much for joining us this weekend. A lot of effort has gone into planning this conference, and we're excited to get started. Our first talk today is with Michael Saylor, an entrepreneur and business executive who co-founded and leads MicroStrategy, a company that provides business intelligence, mobile software, and cloud-based services. In July of 2020, Michael announced his intention for MicroStrategy to purchase Bitcoin. His company bought $250 million worth of Bitcoin in August of that year. To date, MicroStrategy has purchased a total of $3.97 billion worth of Bitcoin, and Michael has become one of the most prominent and articulate proponents of Bitcoin in the world. Michael is a graduate of MIT, and we are very fortunate to have him with us here today. Michael, thanks so much for joining us.
Yeah, thanks for having me.
One of the reasons we're so excited to have you speak is because you do such a good job of putting the topics we're discussing into a much larger historical and macro context. There are a number of useful analogies that I've heard you use to do this, but where I want to start today is your explanation of Bitcoin as digital energy. Can you explain this concept and why it is important?
I think that when you look at the fundamental breakthroughs with Bitcoin, one of them is solving the double spend problem. And the second is solving the problem of how you transfer a Bitcoin without a trusted intermediary, without a trusted third party. So oftentimes those things are used in context of an asset or a currency. But if you think more deeply about this, solving the double spend problem is the same as solving the problem of conservation of energy in the universe. If I take a block of 1,000,000 pounds of gold and I transfer it to myself, to yourself, there's still only 1,000,000 pounds of gold. And when you think about solving the problem of doing this without a trusted third party, that's the same as making it possible to transfer a bearer instrument or transfer anything in the universe. So if you don't solve the problem of a trusted third party, then you've just created a simulation. I'm transferring 1,000,000 coupons from me to you, and we have a bank somewhere else or another file that's actually keeping the true representation relevant. So now let's think about that a bit. If I have an MP4 file and I gave you an MP4 file, I've created digital information. It's actually a digital video. It's music and it's image. Now, if you take the MP4 file and you send it to your friend in Tokyo, and they actually have a computer, they can decode the file. And if they can plug that into electricity and then put that into a speaker, they can play the file, or they put it into a screen and they can view the file. So I have sent you digital entertainment. If I take away the electricity and the computer and the speaker, it's not digital music in Tokyo. But the file itself is a bearer instrument. If I were to send you just a hash or some kind of key to a central server with music on it, I haven't sent you digital music. I've sent you the rights to access somebody else's digital music. But when I encode the entire Beethoven's Fifth Symphony in an MP4 file, I have sent you digital music. Now that is digital information. Right? It only exists in the context of the human race if there's electricity and there's computers and there's speakers in Tokyo. If you obliterate all the people in Japan, is it still digital music? Well, yeah, it's still a digital music file. And so once we start thinking about that, now the question is it digital energy? If I send you Beethoven's Fifth Symphony to your file in Tokyo, can you buy a building with it? And the answer is no. You cannot buy a building with Beethoven's Fifth Symphony in an MP4 file. Why can't you? Well, because it's non-conservative, because there's a billion other people that also have the same MP4 file, or I could stamp out the MP4 file over and over and over again. And therefore, if I can just send you Beethoven's Fifth Symphony in an MP4 file, and you could buy a building, right, that violates the laws of physics and it blows up the universe, right? Pretty soon the cost of a building would go up by a factor of 1,000,000 because everybody in Tokyo would want to buy the building with the MP4 file. And what do we call that? Inflation, right? Whenever you have something that's non-conservative in the universe, you get inflation. But The entire last 30 years of the internet is all about digital transformation of information and digital maps and digital music and digital entertainment. These are all examples of non-conservative bearer instruments moving through cyberspace. What do you get? Well, you get an explosion of information, an explosion of entertainment, an explosion of education, all good things, but they are not energy because they are not conservative. What is the difference between that and a file that holds your private keys to $1 billion of Bitcoin? If I send you my private keys to $1 billion of Bitcoin, you can indeed buy an entire city block or a building in Tokyo, and I can't. Right? So it was a transfer of energy from me to you. Now, some people say, well, it's not really energy because blah, 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 you can't turn it into electricity. But they missed the point. The point is, I sent you the file with, first of all, would you want the file with the $1 billion of Bitcoin in it if I offered to send it to you? Presumably, right? So it's pretty clear it's different qualitatively than an MP4 file that plays Beethoven's Fifth Symphony. And so I send you that. Now, how do you turn it back into energy? Well, a lot of times people don't understand what energy is, right? Energy is electricity, or it's sound, or it's a block of granite, or it's metal, or it's glass. It's all matter. Everything in the universe is energy, right? And matter can be converted to energy. Energy can be converted into matter. Tesla said, if you want to understand the secret to the universe, think in terms of energy, frequency, and vibration. And it's not something we think about very deeply until you have to. But for the first time in the world of the internet, in the world of technology, in cyberspace, you have to start thinking about vibration and energy and frequency, right? That's the significance of Bitcoin. So I'm going to send that file to you in Tokyo. Now, how do you convert it into a building? Well, it's digital energy. You're going to convert it into political energy by running it through an exchange. You're going to sell the Bitcoin for yen. And political energy is just another fluid. It's another medium, in this case, the currency. And then I'm going to take the currency, I'm going to buy the building. And if I don't want the building, I'm going to buy a tanker with oil in it. Or if I don't want that, I'm going to actually pay 1 million people to work for me for an hour. Right? I'm going to convert it into work. I'm going to convert it into property. I'm going to convert it into matter. I'm going to convert it into any form of energy, into natural gas, whatever I want. And the exchange it's like a heat exchange. I take the digital energy, I make it political energy, then I make it matter, or I make it property, or I make it work. And you could say, well, if you take away the Bitcoin exchange, it's not energy anymore. Well, that's kind of like saying if you took away the speaker, is that a digital music file anymore? It's still a digital music file, right? And of course, it's kind of ridiculous because if it's a digital music file with Beethoven's Fifth Symphony and you want to listen to it, you'll probably find yourself a speaker and a computer to run it through because you want what's in the file. You want to decode the file. And if I gave you $1 billion worth of Bitcoin in a file, you would probably travel somewhere in the world and find an exchange or a person. Even if there was no exchange, you would go find someone that owned a building and you would just swap them the Bitcoin for the building directly in a peer-to-peer transaction. So Bitcoin is digital energy because it is non-conservative and because it can get work done, just like energy can get work done. And also because it can be converted into matter or property. Now, let's think a little bit about this concept of Bitcoin, right? The simplest metaphor is it's digital gold. Well, let's think about what is gold, what is property, what is money, what is capital, what is energy? Okay, well, gold is a property, and property is low frequency money. If I take $1 billion and I put it in a bunch of gold, it sits sometimes in the same vault for 30 years. Very low frequency. If I put it's kind of low maintenance, low frequency. If I put it into a building, it sits in the same place for 30 years. It's high maintenance, low frequency money. If I actually put it in currency like the yen, it's mid frequency. It's mid frequency, money in this particular case. Now, currency is a way that money moves through a medium, and some currencies will hold the energy very well. A strong currency, Bitcoin is a strong currency if it's used as a currency, but maybe the US dollar is a stronger currency. The yen is a weaker currency. It's lost 14% of its value in the past few weeks. The peso is a weaker currency. The bolivar is a really weak currency. So you have weak currencies, you have strong currencies, and when we call them weak or strong, it's really kind of it's an articulation of the coefficient of energy loss, or the coefficient of the adiabatic lapse, the energy lapse in the fluid as the energy moves through it. And when you understand money like that, then you understand the currencies are just fluids through which money or monetary energy can flow. Money is economic energy. What is capital? Right? Capital is the concept of pure economic energy. So if I give you $1 billion of capital, right, and you want to hold it for 100 years, how do you maintain the capital? Well, if you put it in a weak currency, it goes away. You put it in a strong property, it actually accretes or holds its value. So what is Bitcoin? Well, Bitcoin's digital gold, but it's also digital property. It's also digital money. It's also digital capital. It's also digital energy. Think in terms of frequency, right? That's what Tesla told us to think. Low frequency, it's property. High frequency, it's energy. Now, what's the difference between money and energy? And what's the difference between, well, money is monetary energy, right? Properly understood. When we use money and currency interchangeably, we're kind of sloppy and we need to get much tighter. Currency is political energy, right? It's a generally fiat currency. It's political energy. It's a medium to move the monetary energy through. But what we normally think of as money, we oftentimes, the only thing we remember is currency, like coins or fiat currency. So let's think a little bit about the difference between currency and energy. Currency is mid-frequency and discrete money, whereas digital energy, pure energy, could be high frequency and continuous, or it could be mid-frequency and discrete, or it could be low frequency and discrete, right? Energy is anything, right? The universe is composed of energy. And now here's where we get to what I think is the real big breakthrough. Once you get your head around the idea that Bitcoin is digital energy and it could vibrate and oscillate at all frequencies, and it could be transformed. What is vibration? Vibration is converting your kinetic energy to potential energy, or converting one form of energy to another form of energy, right? Once you understand that, and then you think, we've got a way to put energy in cyberspace, now an entire world of possibilities open up. For example, if Bitcoin is digital energy, then I can create radiation in cyberspace. So for example, the sun shines upon you. What does that mean? And music to your ears. What does that mean? Music to your ears is acoustic energy flowing through the room to make you happy. But and you can harm somebody with acoustic energy. I can create a directed acoustic energy weapon and blow out your eardrums, right? Sun shining on your face, is it bright sunshine or is it mild sunshine? Or are you in the dark? Well, if you want to kill the planet, you turn off the sun, right? So if I put sunshine on the planet, I light up the planet, it's energy, and eventually the energy could be converted by photosynthesis into life, right? So, and eventually you end up with things like coal, and you'll have oil, and you have everything that we live off of. Okay, so what is the equivalent of radiation in cyberspace? It's, you come to my website and you have a Lightning wallet, and I have a Lightning source, or a Satoshi source. And every second you spend on my website, I send you 1 Satoshi. That's a very light sunshine. What if I sent you 100 Satoshis? Brighter sunshine. What if I sent you 1,000,000 Satoshis a second? Would you bask in the glow, right, of my radiation, right? In that particular case, you're going to get very powerful. I mean, think about standing underneath 1,000,000 Satoshis a second. Now, here's the interesting thing. Like, if I told you I had a website where you could receive 1,000,000 Satoshis a second, would you show up? If I told you I pay you 1,000,000 Satoshis a second to listen to my mouth move, my lips move, would you listen? Very interesting, right? Now, if I want your attention, I shine the light right, in cyberspace. No one ever thought to do that with currency, but the closest equivalent would be I shower money on your head, right? I drop coins on your head. I throw pennies at you. But it's not very practical to throw pennies at people. And, at the end of the day, it doesn't work. It's very practical to actually radiate Satoshis at people. And if we follow this a little bit further, now the question is, if radiation is sending my Satoshis in your direction, what's gravity? Right? Can I actually create gravity? Right? This is a very interesting thing. You have Satoshis, right? And you want to come into my orbit, right? And we can start to do an exchange where well, I guess here's an interesting observation. You have 20,000 Satoshis, and then every minute you lose one Satoshi, and when you get to zero, you get kicked out of cyberspace. You get kicked out of my web or my mobile app. That's like flying an airplane at 20,000 feet. And when an airplane's at 20,000 feet, it has more energy. It has potential energy. You can use that energy to speed up. When you run out of 20,000 feet, you crater into the dirt and you crash and burn. It's the problem. So what if I actually start to model your interchange through my cyber system by taking your potential energy or giving you kinetic energy in return for it. If you actually deposit 20,000 Satoshis with me, and I give you speed and velocity through my website. We come back to Twitter, right? You want to post a comment, you have to actually deposit 10,000 Satoshis to post a comment. You want to post 1 million comments, you have to post 1 million times 10,000 Satoshis. There's a cost for kinetic energy, and that is the potential energy. I'm actually vibrating, I'm changing your energy situation. What is orbit, right? Like, what if I gave you 1 million Satoshi loan, but you had to give it back to me in a year? Yeah, that's very, I can get you to orbit, right? A bank is an astronomical body. I can get you to orbit around my cyber body by exchanging Satoshis with you through a smart contract. And I can vibrate, and I can create all sorts of forms of energy. Like, one form of energy is the ability to send messages on Twitter. Another form of energy is the ability to talk to people on YouTube. You want to give me 100 million Satoshis, maybe I will give you the bandwidth of 10 million people on YouTube, right? I will exchange one form of energy for another form of energy, right? Maybe you can create a way to slingshot around my sun, right? And I can create competing ideas. Now, let's back off and say, well, what is the significance of all that? If you understand Bitcoin as digital energy, and you can see high frequency vibration or high frequency exchange, you can create an entirely new class of applications using Lightning, right? You could create cybersecurity applications. You create Lightning badges that will allow you to cross cyber domains. You can create marketing applications that actually reward people with streaming sats for their attention. You can create any kind of high frequency interactions. They say you can't die in cyberspace. Well, you can't die in cyberspace except through proxy right now, because everything is really based on a trusted third party or a counterparty, and they're the one that decide, like Visa or a credit card network. They decide whether you ran out of money and they kick you out, or they they knock on your door and they arrest you because you can't pay your bill, right? So cyberspace is really a simulation right now. But if we actually throw away the Visa network and the banks, and we just substitute a Lightning wallet on one side and a Lightning wall or a Lightning source on the other side, or Lightning Bank, then you can literally move anywhere at the speed of light. You can move through 1,000 websites in 10 milliseconds each. You can exchange energy, and you can receive energy for your action. You can create or duplicate gravity. You can also duplicate friction, right? You can also create the speed of sound. You can create limits. For example, how fast should you be able to move through Twitter or through YouTube? right? At the point where, this morning I posted a tweet and I had 6 comments within 1 second. They weren't real people. They were bots, right? So in a world without friction and a world without consequences, I can send 1 million bots to 1 million places and smash them up anonymously in order to corrupt cyberspace. But what we have now with Bitcoin, once you properly understand it, once you see that it is truly a block of energy, it's moving at low frequency on the base layer, but it moves extremely high frequency on a layer 2 or a layer 3. I would say if you're a technologist today and you're thinking about creating the next great thing, you ought to be thinking about how you create applications of digital energy for security or for beauty, right? You can create something that is, you can make Twitter 1,000 times better, more beautiful. You can create economic applications. You pay me money when you send me message. You can create marketing applications. I will shine Satoshis on you by listening to me. You can create, how do you create a wall in cyberspace? Let's think about how you create a wall in real space. I create a wall and it's plywood, or maybe a wall which is drywall. You can smash right through a drywall because there's not a lot of energy in drywall. If you create a wall which is made of steel, 1 inch thick, and you run as hard as you can at it, right, you damage yourself. So creating a wall in the real world requires you use more energy. What if I create a wall of Satoshis in cyberspace? Or in this particular case, I create an application, and when you show up to the application, you have to post 1 million Satoshis. And then every time you break my rule, like maybe you post a swear word or you post a phishing attack in a comment, I charge you the 1 million Satoshis. It's like literally pounding it's like you pounding your face into a brick wall or into a steel wall. I can create a wall in cyberspace around a product if I have digital energy, and I can do it without requiring a trusted third party, right? The trusted third party, the doxing, is what makes cyberspace not work, because we go from 8 billion people being able to interact in milliseconds, and including computers on our behalf, to a situation where, I have to post a credit card and half the world doesn't have a credit card. And then I got to wait 30 to 60 days for final settlement of the credit card. And so, how do you run up $100 million bill in 8 seconds? Like, in the real world, if I light up a bonfire and you walk into the bonfire, you will burn to death. Right? But in the cyber world, you can't burn to death, right? There is no equivalent to that, because the credit card companies, they're going to decay the deal. If you actually went on Twitter, launched 1 million bot attacks that cost you $10 each and generate a $100 million bill, right? The credit card would fail. And so you can't really create things with true consequence, because the world is running on the equivalent of rubber band and baling wire, simulated proxies of energy. So I will stop right there, right? That is, in a nutshell, though, why I'm very interested and excited about Bitcoin as digital energy.
Awesome. Thank you. And I'm curious, why did MicroStrategy or you choose to purchase Bitcoin back in 2020, and how has that evolved since then? And why have you chosen to focus on only Bitcoin and not other cryptocurrencies?
So capital is energy. We had $500 million of treasury capital. If you store your energy in pesos, that $500 million would become worth about $5 million. Right? Like I made a joke the other day. Lex Friedman said, I picked up $20 off the street. And I said, $20 doesn't buy what 7 cents used to. And the joke was that the value of $20 has decayed by 99.7% in 90 years. 99.7%. That's the loss of true energy in the currency. So if you're holding your capital or your life force or energy as a company in a currency or currency derivative, and that means dollars or US sovereign debt, the monetary inflation rate, or which is the adiabatic lapse rate, which is the risk-free rate, which is the cost of capital, is like 15 to 20%. And in March of 2020, what we saw was the cost of capital went to 25%. Everything got 25% more expensive in 12 months. Now, what is everything? Well, scarce desirable products. The S&P index went up 25% in 12 months. So you had an expansion of the currency, right? Expansion of the currency results in a collapse in the energy per unit of currency. This is the same as if I expanded the size of your room by a factor of 2, but I kept the oxygen or the air in it the same, the temperature would fall, right? That's how an air conditioner or a refrigerator works. I would freeze you to death. So what we saw in March was the currency expanding. We're sitting on a block of $500 million, and you can do the math in your head, and you can conclude that half the energy or half the wealth you have will be gone in about 36 months, maybe 48 to 36. So, why did we convert to Bitcoin? Well, for the same reason that if I told you I was sucking the oxygen out of the room you're in right now, and I'm going to suck 20% of the oxygen out of the room, every period for the next 4 periods, you would reach for an oxygen mask, or you would run out of the room. And if you were stupid, you'd stay in the room, but you would suffocate or you'd freeze to death. So every company in the world that's sitting on a treasury, if you had $1 billion right now in US sovereign debt, it's costing you somewhere in the order of $150 to $200 million a year to hold that position. The smart thing to do, of course, like if you're conventional, what you do is you give all the money back to the shareholders and you borrow $1 billion, and you run on zero net working capital, or you even run on minus. Like I borrowed $2 billion and I have minus $1 billion in currency. So if I can get heavily indebted, I have negative working capital. So instead of it costing me $200 million a year to keep the money, I make $200 million a year because I'm leeching off of the general public. I'm basically taking advantage of my ability to borrow money from a central bank or a bank in order to get short or have a negative effective working capital balance. Now, where do you see that? Japan. In Japan, whenever you see a zombie company that is loaded up with debt, what the company did is they basically converted all of their positive capital into negative working capital. So perversely, if I owe $10 billion and if the money supply or the currency supply expands at 15% a year, and if I pay 3% interest, I actually make $120 million a year doing nothing. See, that's the perversity of being able to borrow huge amounts of money. You ask yourself the question, well, how are you going to borrow $1 billion of money, right? My advice is, if you could, it would be a good idea, right? If you were able to borrow $1 billion in an inflationary environment, you would get rich in a hurry just by being negative energy or negative currency. So why'd MicroStrategy do it? It's like, well, we were basically what we realized is that if we generate $75 million of free cash flow a year through the work of 2,000 people working as hard as they can, and if we held $500 million of US currency derivatives, losing $150 million a year, then we would net negative lose $75 million a year in shareholder value working as hard as we could forever. So in essence, you're going backwards. So this is the big idea. And if you look at companies, anybody is either in a negative or a positive working capital situation. When the currency is expanding at 5% a year, it's kind of a nuisance. When you go to Argentina or Turkey and it's expanding at 50% a year, it's a life or death situation. You have to be negative working capital. But now let's think about central banks, like countries. You have a country and you sell $100 billion worth of oil a year, and you convert that into a treasury reserve, and you hold US sovereign debt. So you've got $1 trillion of US sovereign debt. If you hold $1 trillion of US sovereign debt and the US inflates the currency at 15% a year, it costs your people $150 billion a year for you to use the US currency as your treasury reserve asset. You're paying $150 billion a year for quote unquote social security or economic security, right? So you have to ask yourself the question, if you have any energy in your institution, your family, works for families, works for companies, works for countries, you have energy. How are you going to, how are you going to store the energy? And the way you store your energy colloquial is what we'll call the treasury reserve asset. And if you choose, let's make it simple. You could choose the bolivar, you could choose the peso, you could choose the dollar, you could choose gold, or you could choose Bitcoin. You could choose barrels of oil. They're all just different treasury reserve assets. The problem with the currencies is they all have counterparty risk, right? A bank can seize them from you. But if they didn't, then you're going to have an energy lapse of 95% to 99% in the bolivar, energy lapse of 50% in the peso, energy lapse of 15% in the dollar, energy lapse of 2 to 4% in gold. You're going to have an energy accretion in Bitcoin. That's why we did what we did. It's just a simple, it started out as defensive survival strategy. It's like, well, we're going to freeze to death and suffocate if we don't do something. So it's a survival strategy. Then it became opportunistic. What we realized is we could issue $650 million of debt that pays 1% or less than 1% interest, and we could buy Bitcoin. And that just seemed like a good idea. Go short the dollar and go long the asset appreciating. And then it became a strategy because we realized we could issue $1 billion of debt at 0% interest and buy Bitcoin. Right. And somewhere along the line, it went from a reflex to an opportunity, to a strategy, to an ideology.
Awesome, thank you. And so with all of this excitement around the innovative nature of Bitcoin and all of this potential, there's still a lot of criticism. What are some of the criticisms that you've heard about Bitcoin from those who don't necessarily understand it? And how do you think it can be better explained to these individuals?
I think the criticism that comes from the technologists and the computer scientists and the people in the crypto industry or just others is, oh, it's not digital energy. It's just digital currency, or it's digital, or maybe it's digital property. That's well understood and appreciated now. But it started out as a currency. People, I think, have embraced the fact that it's really digital property because it's low frequency money. It's not going to be a currency per se until it's legal to transfer it without a taxable event. And of course, the legal part is a regulation put on by a nation state. So if the nation state makes it possible to transfer it without a taxable event, it can be a currency. Until then, it's really just a property. And I think we got past that hurdle for the most part. Now people go, well, it's not energy. It's not energy because you can't convert it into electricity. Well, and I think that's a crippling ignorance on the part of a lot of people, because if you don't understand that it's digital energy, then there's like $100 trillion worth of applications you're not going to get. You're locking yourself out of the 21st century cyber economy, if you don't grasp that. And I would say, right, that the most powerful ideas are paradigm shifts. Warren Buffett doesn't understand that Bitcoin is digital property, right? The last week he said, well, I can get yield, I can rent out farmland and I can rent out a building, but I can't rent out Bitcoin. He's like, well, totally wrong. Of course you can rent out Bitcoin, right? In fact, Bitcoin is like farmland or a building on land, but you got rid of the land nexus and you got rid of the building maintenance cost. And now you have the pure capital, right? If you thought more theoretically, you would understand that Bitcoin is pure digital capital, which means that anywhere in the world, you can find hundreds of thousands of people that will want to rent out your capital. And so the lack of understanding of it as digital capital is still a problem with the mainstream investor, not so much a problem in the crypto community. But when people understand it as digital property and digital capital, and you can rent it and you can mortgage it, right? Then that'll be a light bulb moment for many people. And then I think on the other extreme, when they understand it as digital energy, they'll start to think about creating applications with gravity and friction and radiation and orbital mechanics in cyberspace. And now we can actually create things of substance in cyberspace. I can actually create something that's got tangible matter in cyberspace that will be drawn into your orbit, that will be fueled by your energy, that can either be created or destroyed by your energy. And that opens up the next era of the internet, right? And so I think that's really critical. Now, we'll move on to some third-party FUD. There's a lot of energy FUD that floats around. So, I mean, one misnomer is, this floats with some people is, oh, Bitcoin uses either too much energy or it's bad for the environment. Right? These are based on first-order ignorance generally. If you thought about it, and the reason people think this is they start with one crippling mistake. They think that somehow you can create a digital property or digital energy without energy. That's a crippling mistake. That's confusing a building in the real world for a building in cyberspace or a virtual building. I can give you a virtual building, a virtual plane, a virtual train, virtual medical care, and virtual food in my little happy virtual world, and they don't take any energy, but they're not the same as real medicine, real food, real planes, real cars, real trains in the real world. So when people think that a token circulating on like a proof of stake network or a token circulating in a central database is the same as Bitcoin, they just equate virtual with real, and they conflate the two. So if you understood them technically, if you really thought about the engineering, you'd understand that there's like $20 billion worth of hardware, Bitcoin miners, SHA-256 rigs, and energy from all sources going into securing and driving the Bitcoin network. And of course, if you take away all that, all you've got is a simulation of it. And there's of course 20,000 simulations. In fact, there are hundreds and hundreds of thousands of digital coupons and digital securities and virtual currencies that circulate on non-energy networks. The problem is they're not scarce, but the other problem is they're not open, they're not permissionless, which means they're securities, they're not property, and they're not bearer instruments, but rather they're counterparty obligations, right? They're not money, they're credit. So you can create infinite credit without energy, but you can't create money without energy. So that's poorly understood. Most people in the crypto industry don't understand securities law, but it's not necessary to understand securities law to understand the basic idea that if it takes $20 billion of semiconductors and electricity to create something unique, that's more scarce and that's harder to attack, right? That's more secure and that's more tangible than if I take a simple computer in my basement and I simulate all that stuff in a computer program. That's just a computer program. So a lot of times people, they get that wrong. And once you acknowledge that you need energy to create something real in the real world, then you just compare Bitcoin to the right thing, which is you have to compare it to planes and trains and automobiles and medicine and retail and defense and the rest. And now you come to a very simple conclusion, which is Bitcoin is the cleanest, most efficient, most valuable use of energy in the world. Full stop, right? That's the big idea. You're putting electricity into a data center and the product is digital energy. There is no cleaner product coming out of a data center than digital energy. It is immortal, indestructible energy, right? That's a cleaner product than a Netflix streaming video. It's a cleaner product than iPhones and iPads. It's a cleaner product than I put the energy into a laundromat or into a natural gas facility or into a plastics refinery, or I put the energy into a hospital or a school or a building. All of those things are dirtier applications of energy than a Bitcoin mining center. So once you get that idea, it's actually not, it's not energy intensive. It's actually energy efficient. Network that's worth $800 billion. There is no example of anything in the world that you can put $2 billion of electricity into and get an $800 billion market cap out of, other than Bitcoin. So that's a big misnomer. People don't understand digital energy. They don't understand digital capital. They don't understand digital property. They don't realize that ethically and technically, you can't succeed without putting energy into it. Right? In this particular case, not just pure energy. It's not pure electricity, right? Bitcoin's built by an encrypted form of electricity or encrypted energy, or in this particular case, it's SHA-256 hashes through a semiconductor rig fed with electricity. And that's significant too, because if it was pure energy, it would be a pure commodity. But in fact, because it's digital energy and a form of digital energy, SHA-256 digital energy, that means that there's Moore's law that's applying, and there's a learning curve. And of course, the efficiency with which we create that digital energy is increasing about 18% to 36% a year, right? The current mining rigs are 58 times more efficient than they were about 8 years ago. So what you have here is a flavor of digital energy being created by electricity, and we don't know any other way to do it. I wouldn't say that it's impossible to come up with another way to do it. Someone may come up with a more energy efficient way than SHA-256 proof of work hashes, maybe, but no one's done it yet, right? No one, and no one has managed to create a digital property that doesn't use some sort of proof of work function. So I think that most of the ESG FUD is actually guerrilla marketing from competing crypto networks that are struggling to be viable. And generally they struggle with this problem, which is if you don't use energy, if you don't use energy, then it's a security. And if it's a security, you can't sell it to the general public without a registration statement and without full disclosures. It's just like an equity stock. So those are my thoughts on that.
So last question, we've got, I think, just 2 minutes here. This space is growing quickly. There's a lot of innovative products. What role do you think Bitcoin will play in this evolving landscape?
The landscape meaning the overall economy or the crypto economy?
Yeah, the crypto economy.
Bitcoin is the technical, ethical foundation of the entire crypto economy because it is a crypto asset network that is property, that is open, that's permissionless, and it represents a bearer instrument of energy that could be exchanged in time and space. Right. So, I mean, the critical issue is 8 billion people need to be able to do billions of transactions an hour with represented by 20 billion or 50 billion computers, right, at the speed of light. And so to do that, you have to have first, you have to have the asset, right? And Bitcoin is the bearer asset. Then you need then you need a transaction network. I think Lightning is the most likely candidate. Seems like the candidate for the open permissionless transaction network. So Bitcoin and Lightning look like the foundation. Bitcoin's role is for you to put the block of energy into the network and for it to be there in 100 years or 1,000 years, right? You need a foundation. I think of it as the granite or the schist underlying Manhattan. The bedrock of Manhattan is 400 million years old. You don't need it to move. You just need it to not move. In fact, if I came to you with the idea that I needed to, I'm God, and I'm going to modify the schist under Manhattan, and I'm going to make it much lighter and see-through so that I can build windows with it, you say, we just turn Manhattan into glass. And so I don't want to build glass skyscrapers with glass beams on glass. It starts to look like a glass house on sand. Could be a very bad idea. Bitcoin is the granite underpinning of the entire economy. Then Lightning is going to be the transaction layer that is open, permissionless protocol. And then I think you've got thousands, tens of thousands, hundreds of thousands of applications. And they'll be corporate, they'll be proprietary. If they're open, they'll communicate with each other via Lightning, or they'll settle with each other on Bitcoin. And if they're not open, maybe they won't support Lightning. Like you can create a proprietary application. MicroStrategy is a Bitcoin application. If I hold billions and billions of dollars of Bitcoin, then my stock is a Bitcoin derivative. We don't support Lightning. You can't withdraw your Bitcoin from the MSTR stock, right? We don't support Bitcoin. You can't withdraw Bitcoin on the base layer with MicroStrategy, but MicroStrategy is resting on the foundation of digital property, that thing which is Bitcoin. So I see Bitcoin as like the sun, right? It is the source of all energy in the solar system, right? It is a source of radiation, right? It can give life to everything else. And now it's just left to entrepreneurs to figure out how they're going to feed off the energy of that sun. And the world is full of opportunity.
Michael, thanks so much. This has been great. We really appreciate your time.
Yeah, thanks for having me. Best wishes to everybody. Sorry I can't be there with you today. Go Tech.
Thanks so much.